This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Mics are hot, Carol. Mics are hot, just so you know.
All right, leaving the potty mouth outside the studio door. It happens. We work in news.
That's just a little preview for what we're talking about at about 4 o'clock Wall Street time. It makes you stronger, apparently.
Apparently it does. You're going to want to stick around. We'll have that during the close. Very good afternoon, everybody. Looks like we made it. It is Friday, finishing up the last full trading week of 2025. Christmas next week, then New Year's, and then we start off a new year. Having said that, it's an interesting day. Stocks up, bonds down.
Yeah, triple witching, in which derivatives contracts tied to stocks, index options, and futures mature, compelling traders to roll over existing positions or start new ones. So maybe we'll see a little volatility late in the session.
A lot of stuff going on. Citigroup estimating $7.1 trillion worth of notional open interest expire. So that can get you kind of seeing a lot of movement. It's a lot. As for us this hour, we're going to talk about U.S. rates. A bit of a review after a week of questionable economic data. Was it, what did they call it? Like Swiss cheese, lots of holes?
Oh, yeah, CPI, Swiss cheese. That was a Bloomberg. I like that.
I like
the Bloomberg
it.
description.
It was a cool headline.
Yeah,
they had fun
cool
in the newsroom on that one. Hey, also lots of Fed talk amid who will be the next Fed chair. We're thinking about that as well. So we're going to get into that with Mike McKee in a moment.
Yeah, also, the week that was in Washington, what some say is a White House that's struggling with its message. We did hear from the president this week trying to stay on message. And I think that's going to be a big theme of 2026 when you think about the midterms and the messages that Democrats and Republicans want to get to constituents.
Yeah, it's not just about the ballroom build out or the Hall of Fame when it comes to presidential pictures. We'll talk about that. You know you're going to want to know more. Hey, also, speaking of reviews and what's going on, we're going to get a great take on kind of the year that was in robotics, what's to come. Ty Brady's back with us, Chief Technologist of Robotics at Amazon, on the evolution of, yes, robotics and AI in the Amazon warehouse.
Yeah.
On the warehouse. 3, 2, 1, Amazon warehouse.
Soon we'll be replaced with robots. Hey, all that and more coming up over the next hour right here on Bloomberg Businessweek
How do you know I'm not
Daily.
one?
First up, a check of the day's trade and top business stories. Here's Charlie Peller.
I could be.
Thank you very much. And here's what's going on. We've got the Dow, the S&P, NASDAQ, all advancing, triple witching. Yes, keep it locked in to Bloomberg Television and Radio to see how things shake out in that final hour, final few minutes of trading. Right now, though, we are looking at gains. The Dow, the S&P, NASDAQ, all advancing. Let me toss in the NASDAQ 100 index, Russell 2000 index, and yes, the Bloomberg Mag 7 index. All green on my screens right now. I begin with the NASDAQ 100 index right now, up 1.2%. Tech shares are rallying. NASDAQ 100 higher. NASDAQ Composite up 1.1%. The S&P 500 index at 68.33, up 58 right now. A gain there of 0.9%. The Dow up 268 on the industrials, up by 0.6%. The 10-year 4.15% with a 2-year currently yielding 3.48%. Gold up 0.4%, 43.48 the ounce. West Texas Intermediate crude up 1.1%, 56.76 a barrel on WTI, and Bitcoin up now by 1.9%, 87,203 on Bitcoin. A rally in several tech names lifting equities. Oracle shares right now up by 7.6%. TikTok's long-delayed plan to separate from Chinese parent ByteDance put in motion yesterday when the video sharing sensation said it's being bought by a group of buyers led by Oracle. By the way, ByteDance on track for profits of roughly $50 billion in 2025. Again, Oracle up 7.7%, all part of a broader tech rally. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, let's get right to it. Some economic news. Existing home sales in the U.S. barely rose in November. Recent moderation in price growth and mortgage rates motivated buyers at the margin. U.S. consumer sentiment rose in December by less than expected, remaining depressed amid lingering affordability concerns. I'm rushing because I want to get to Mike.
All right, let's get to Mike with thoughts on how it all may affect the direction of U.S. rates. Bloomberg TV and Radio international economics and policy correspondent Michael McKee. He's here.
I'll talk slowly.
Thank you.
Yeah,
He's not
please.
a robot yet.
No.
Is there a case building for higher versus lower rates?
No, but I wouldn't say there's a case building for higher rates at this point, but there's always the possibility because we don't know what's going to happen with inflation. And there was a big debate on social media and other things about the CPI report and whether there's a lot of people. I got a lot of messages from people today on Wall Street saying this is fraud. This is an effort to to make things look better for the president. And
why are they saying
that? Is it, Mike?
No. It's not. There's a combination of things that came together. They've never had a situation before where they didn't have a month's worth of data. Yeah. So they weren't able to give you a month-over-month change. So they had to do from September to November, but there's a missing number in there. And some of those numbers are not actual numbers where they go out and survey the price. Some of them are imputed based on the formulas they use, which is what they do with housing. And so they used a sort of standard rule in their playbook if you have a situation like that where you just repeat the number. And so basically it showed 0 for October, which pushed the numbers down for housing, and housing is a big part of CPI, so it made the whole CPI thing. And there's arguments about whether they should have just followed the rules.
Is that a technical term?
I don't know. Isn't there some point where they should make an estimate based on months in the past or something? Here's
the reason they two reasons they didn't. One is that they're very shorthanded.
Okay.
David Wilcox has a great piece on Bloomberg today about that, about how shorthanded the statistical agencies are. But the other is that if they change the way they have done the imputation in the past, then somebody could say, well, that's manipulation.
Okay.
And so they just decided to stick with what they were doing. And economists and people on Wall Street who follow this stuff, they know that we're going to have to get the December numbers.
I was just going to say, throw it out, wait for
throw it out
month.
and wait. Yeah.
Okay.
Get some clean data.
Okay.
Yeah.
Hey, listen, one thing I want to ask you about, Fed Bank of New York President John Williams said there's no urgency to cut interest rates again, given a recent unemployment and inflation data, reinforcing expectations for a pause after a string of recent reductions. Do investors, though, need to kind of take a moment and be aware that a lot of rate cuts might not be coming in 2026? I think there were expectations that they could, or it really is too soon to tell.
It's too soon to tell. The funny thing is we saw market rates go down yesterday after the CPI report came out because they were thinking, the Fed's going to be cutting rates more. But we did not see an increase in the odds of a January rate cut. And right now they're only at 21%. So somebody's figured this out, that it's not going to be as simple. And I wouldn't take it. John Williams is a very smart man, but I wouldn't take what he says as gospel at the moment. He'll change his mind if he needs to, because on January 9th, we get a full December jobs report. On January 13th, we get a full December CPI report. So they will have a much better picture of what's going on in the economy.
Okay, Mike, before we let you go, who's going to be the next Fed chair?
No pressure, Mike.
But Kevin Hassett's still the favorite on this one's Polymarket.
Well, it's funny because he's gone up and down.
Yeah.
He was up, then he was down, and Kevin Warsh was up, and now he's down. And Chris Waller making a late bid on the outside is like a horse race.
It actually really is.
And then I heard today that Rick Reader is actually coming in,
5%.
going to Mar-a-Lago to do his interview with the president.
How do you make sense? Is this what normally happens?
No.
Like as we get close?
No.
Okay. Forgive me, world, for using the word normal. But I mean, okay. So
any other questions, Gail?
I don't know. Stupid normal. This is my Friday. So how do you read between the tea leaves?
I don't think you can.
Okay.
I've tried. The person who probably would be most amenable to the president in terms of interest rates would be Kevin Hassett. But then people who know Kevin say he might not be able to get that through the Fed. Kevin Warsh might do more to upset the Fed and to revamp the Fed and do things that Trump wants. And you might have someone like Rick Reader, who was kind of unknown in this, where Chris Waller would be much more of a traditional Fed person, even if he's calling for lower rates.
What about Michelle Bowman? Her name came up
She
yesterday.
seems to be off the list at this point. And
he mentioned her. He was asked about her yesterday.
He was pretty complimentary.
Well, he was
about
complimentary, but I think the thing that we're hearing is that they like the job she's doing as the regulatory vice chair.
Right.
She's deregulating the banks, and that's what the administration wants.
Look. Yeah, go ahead, Carol.
Well, no. If you want to follow, because I want to ask something else.
On like the rates market side of this and who the bond market would prefer, do we have any indication of that? Are they all safe bets according to the markets?
They're all not terrible bets, put it that way. The markets would probably prefer Chris Waller because they know he would follow sort of Fed protocol and they can understand his logic and his thinking on things. They know that Kevin Warsh has experience at the Fed, but might want to upset some of the ways that they do business. And there is some worry about Kevin Hassett, as I mentioned, being too in the pocket of the president, although if you know how the Fed works, it wouldn't be easy for him to force through big rate cuts.
Mike, one of the things I think about a lot, and I think about after the great financial crisis, having Ben Bernanke as Fed chair, like sometimes we do have the Fed chair we need at a certain moment, right? Or maybe that's just luck that we get that right person, or maybe there is some science to it or thought. But what's the Fed chair that we need in 2026? How do you think about who do we need to have in that position?
Well, I think you need a couple of the skills that Jay Powell has. One is that he's very unflappable. And whoever the Fed chair is, if they don't cut rates by 200 basis points in the first year, the president's going to be after them. You know he's going to come out and,
whoever it is,
and post on Truth Social about how terrible they are.
Nobody's pricing in 200 basis points of rate cuts.
Well, nobody is except for the man in the White House. So, you've got to put up with that, be able to put up with that level of criticism. But the Fed has gotten much more individualized since the days of Alan Greenspan, who would walk into the room and say, okay, here's what we're going to do. And so it's somebody who can develop a consensus. And so you could have people dissent and say, that I would have done it differently, but not come out and say, you've just totally destroyed the economy and the country. So that was a skill that Powell brought. As he was a lawyer, and worked in investment banking, and he has ability to bring people together.
And let's not forget, he was President Trump's choice.
Well, yes.
Is this the first time?
Yeah.
Is this the a job that nobody, like, who would want this job? Like, you're not going to make everybody happy, and in fact, you're going to make probably the most important person in your world unhappy, because
I can name 4 people who want the job. But,
why though?
Well, if you're an economist, it's sort of the pinnacle. You're using all of your skills to help drive the economy in the one way that economists can do that, and it is a very, very important job. And a lot of people, certainly during the Greenspan years, called him the second most important person in the world to the President of the United States. So it has a lot of perceived power, and it has a lot of great responsibility. So it would be an honor.
I always think about that. Maybe we've already talked about this, but I do, again, go there that, there are times people say things either on a campaign trail or maybe, when talking about, their possibility of taking over something like the Fed chair. There's things you'll say, and then you get into it and you realize either the importance of a position and what you say and do, how that impacts not just U.S. markets, but global markets. And I just do wonder if that's something that we should assume will happen here as well, despite whatever pressure. You can't have a president who's constantly saying, I don't like you out, I don't like you out. That would create incredible volatility, right?
Well, that's the Lisa Cook case before the Supreme Court coming up in January. If the president can fire somebody for no reason at all, then you would probably have that under an administration with somebody in charge like we have now. But no, you become sort of responsible for the economy. And I don't want to say they would say they're not responsible for the markets. If you lose money, that's your problem. But they are also responsible for making sure they don't do something that crashes the markets.
You mentioned the Supreme Court case in Lisa Cook's case, or Lisa Cook's case going to the Supreme Court. Does the outcome of that have any effect on what the president can do to the actual chairperson of the Federal Reserve?
Sure. If the court says you can fire somebody for no reason, then he can fire Jay Powell before Powell's term's up, or he can appoint somebody and then fire them if he doesn't like them, anybody else. I'm
thinking more for the next chairperson of the Federal Reserve. Powell's on his way out. He's still Fed chair for a few more months, but if that is a real, if that could happen and if that becomes a real threat, then I would imagine the bond market reacts, and I would imagine the position becomes much more precarious.
Absolutely, and it's one of the reasons that the Fed and people in the markets would be very scared if the Supreme Court ruled against Lisa Cook, is that then you have this volatility and you don't know what the longer term strategy is going to be, and you have somebody in there who might be taking actions or advocating a position to keep their job as opposed to whatever is best for the economy.
I want to think, we didn't really have a chance to kind of debunk maybe some of the things that the president said in his evening address this past week, but he did talk about the economy, he talked about inflation, money, liquidity that will be coming into the system, giving folks in the military money, which I think many would argue great, because there's a lot of military that come back and face a lot of issues. But I just do wonder about the president's policies and whether that's going to create more inflationary pressure, whether it's regulatory easing or just more money by tax breaks coming into the economy, that again is a big force on inflation in 2026.
Well, as they go into 2026, that's something that Fed officials have on their minds is, do we need to lower interest rates because we're going to get some fiscal stimulus? The amount isn't clear yet because there are limitations on no tax on tips and no tax on overtime that people don't figure in. And then what you get is, people get a $2,000 tax refund. That's an average. So somebody at the higher end is going to get more, and people at the lower end who spend everything they've got won't be able to stimulate the economy as much.
Because the people at the higher end won't spend the money.
Right. Then there's also the issue of, do they get the insurance subsidies put back in for Obamacare? Because if not, then everybody's got to spend all that money. But in general, there's a feeling we will get some fiscal stimulus. The military thing is kind of disingenuous because that money was already appropriated to give to the service members their housing allowance money.
Oh, seriously?
And so he just put a different name on it, and he'll put his name on the checks and say, I gave you a bonus, but it was already.
But is the amount,
anyway.
is the amount different than those service members would have gotten?
Well, I assume it is because it's around 1776, so they've just divided that up. But that money would have gone into the economy anyway.
Hey,
I see. Among
the president's comments, talking about the economy, what he inherited, where it is today, what he said about inflation, and so on and so forth, what do you think, to be fair, what wasn't correct? What, in your mind, as you listened to it and heard it, that you think, here's the reality?
Well, most of it was not correct. I mean, there was a lot of exaggeration and a lot of cherry picking of data. In almost every category, growth, unemployment, inflation, the numbers are worse today than they were on the day that he took office. But they're still not bad. That's the thing. Yeah. But he can't claim credit he can't say there was a mess because Biden did not leave him with a mess. And he hasn't done anything that has significantly improved it to this point, which is why you see him and his officials saying, well, next year is going to be great.
One area where you could take a victory lap would be oil prices, and we're going to spend a good portion of our program talking about that later. But just very briefly in 30 seconds, why maybe, and wouldn't that have a greater effect on the economy because more cash goes in consumers' pockets when price of gas goes down?
It has a greater effect, but what we're not getting necessarily is the business investment side of that. This happened in 2015 because prices are so low. We're not seeing more drilling.
There's no incentive.
We got drilling rig numbers out today, and they fell again. The number of rigs out there is lower, but because of technology,
right?
The wells they have, they're able to pump more out. And then you've got a lot of other countries adding oil now.
We're going to talk about this in our 240
Guyana.
blog. A great story, the Bloomberg Big Take. Michael McKee, thank you so much. I think we're not going to see you for the rest of the year.
No. I'll see you in a year.
Okay.
No.
Merry Christmas, happy holidays. Bloomberg News, Mike McKee, of course. Hey, as we head to a break, President Trump getting ready to make some comments there from the White House.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. The last stretch of a busy week for markets sees gains, and right now the S&P 500 index holding close to session highs. The S&P higher by 61 at 68.36. That is a gain now of just about 0.9%. Stocks are advancing on a record 7.1 trillion options day. Dow up 293 now, up 0.6%. NASDAQ up 270. That is a gain of 1.2%. The NASDAQ 100 index up 1.3%. Russell 2000 index of small cap shares up 0.8, and the Bloomberg Mag 7 index up 0.7%. The VIX just about 15.2 right now on the CBOE. Volatility Index. We've got the 10-year yielding 4.15%, the 2-year 3.48%, gold up $14 the ounce, 43.47, up by about 0.3%, and the West Texas Intermediate crude oil up 0.9 now, 56.64 a barrel. Bitcoin up 2.3%, 87,550 on Bitcoin. Cruise news, specifically earnings. Carnival Corp up 8.7% after earnings. Carnival gave a better-than-expected profit outlook for next year, and it reinstated dividend payments. That news sending shares higher. Also out with earnings, KB Home, the stock is down 8.1%. The home builder posted fiscal fourth quarter profit that missed analyst estimates. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stenovic. We are watching and monitoring the president there at the Roosevelt Room in the White House, making some comments. He's speaking to reporters at a drug pricing announcement. He mentioned Johnson & Johnson will be there next week. He also took questions and has talked about the gold card, if you will, the golden visas, if you will, or forgive me, no questions, but making a variety of statements. He's talking about the golden visas. Those are those basically pay $1 million and you can kind of get entry into the United States. And he says they've taken in $1.5 billion from them. And then, Tim, he's also talking about reiterating unemployment went up due to federal layoffs. And he says the government workforce will continue to be reduced. He also talked about 4.5% unemployment rate is an amazing number. So forgive me, making some comments there at the podium. We'll continue to monitor it. And if he does take questions from reporters, we will certainly share that with you. Yeah,
he also follows up on comments that he made on True Social earlier today, where he said 100% of our new jobs are in the private sector, and he could reduce unemployment by, to 2% overnight by just hiring people into the federal government. He made these comments on social media just in the last couple of hours. All
right, good to know. That's the backdrop. And this event is supposed to be about drugs and pharmaceuticals. We heard that from the White House spokesperson, Caroline Leavitt, earlier today. So again, we'll continue to monitor that. Certainly something that plays out in the business community and certainly in the market community. Hey, one of the things that we love to talk about, robotics, technology, automation. Bloomberg Weekend recently reported out that humanoid robots are coming as soon as they learn to fold clothes. Count me in.
Okay. Yeah, okay.
Why they wrote this, apparently the team attended a recent Silicon Valley summit, and there they saw small robots roaming and pouring lattes, while evangelists hailed new AI techniques as transformative. But full-size prototypes, they were pretty scarce.
Okay, I want to see what Ty Brady has to say about this. He's chief technologist at Amazon Robotics. Ty is also founding partner of Mass Robotics. It's a not-for-profit organization that's become the world's largest robotics innovation center and serves on a number of boards to promote STEM learning and advancement. Ty, good to have you back on the program. Happy holidays. I want to get to this idea of humanoid robots because it doesn't matter if a humanoid robot can fold laundry for a lot of the purposes that you have for Amazon. How are robots, apart from the Kiva robots, used right now in Amazon warehouses?
Well, thanks, Tim. Thanks for having me on, Carol. Been nice to hear you as well. It's always a pleasure to be on the show and talk all things robotics and tech with you. Indeed, the age of physical AI is here. Amazon is building our physical AI systems to help better the customer experience, expanding our selection, lowering cost, fueling the faster delivery times that we know our customers love. But given your question, think of the very practical, everyday experience where we're doing this at a very high reliability and scaling this where we're shipping millions and millions of products every day here for the holiday season. It's really exciting to see. It's very real. It's very practical, and it's something that we're very proud of in what we're doing with our employees.
All right, we want to talk about this. You know we do, and we will. But I do want to pick your brains because I always feel like I learn so much, when you join us.
Bring it.
Is that so these humanoid robots? I mean, Elon's working on them. Other people are like, is it years away? What's your thought? Your expertise? You know this world.
I do know this world. I will tell you that we usually start with what problem are we trying to solve? What's the problem we're trying to solve? And once we figure out the problem, then we actually go to functions. What functions should the robotics, should the physical AI systems do, right? So from the functionality, should it fold laundry? Should it do your dishes? Then we derive form. And when you kind of get the cart ahead of the horse when you start with form first, and then see how can you apply this technology. And we don't do technology for technology's sake inside Amazon. What we do is we solve problems. We solve problems, everyday problems, at an incredible scale that actually advances the state of the art in robotics. Right. So if you wanted a robot to wash your dishes, well, congratulations, you have that. You don't necessarily need a humanoid form to wash your dishes. As a matter of fact, it'd be kind of comical to see a robot pick up the dish, pick up a sponge, put the soap on it, scrub the dish, and put it in the drying rack, when you have this really practical robot in your kitchen today called the dishwasher, which is amazing and blends right into the woodwork. So we think about function first and then allow the form to follow.
Okay, so we want to talk specifics here about what's happening in the warehouses. BlueJay and Illuna and more, your systems, BlueJay Robotics, Illuna, Agentic AI, delivery glasses, Amazon's warehouses. These are well known for robotics and the use of tech and AI. How does all of that continue to evolve and specifically impact productivity side by side with human workers?
Absolutely. Yeah, the word I want to use is supercharged. We're supercharging the world's largest fleet of robotics out there with AI, using AI systems to better the reasoning and to better assist our employees, right? We want to eliminate the menial, the mundane, and the repetitive through the use of robotics as a tool set for our employees. And we're entering this era where foundation models are making our robots smarter, more affordable, more adaptable, more conversational, and really reshaping work as we know it, not just in e-commerce, but actually across industries, and creating new kinds of jobs.
Ty, I'm jumping in because right now we're showing, for those who are watching on TV and YouTube and our streaming service, what looks like your special delivery glasses. As we continue to show this, just tell us what they're all about. They look like normal glasses, but what do they enable a driver to do more easily?
Yeah, well, it's the fundamental principle that we have is to use them as a tool set. So allow the driver to understand where the delivery should be. Allow them to be kind of hands-free in order to take the picture of the package at your door. Allow them to understand what's the best route to the customer's door. Allow them to see their delivery notes of where they should place the delivery at the right spot. That's just right for our customer. I mean, we're customer obsessed. So any tool that we can give our delivery employees or our frontline employees, that's how we want to use technology.
Are they rolled out?
I think that we're still in the early stages of deployment.
So when would they be fully rolled out across the network?
Hard to tell.
Would it be within a year, maybe within 2026?
Yeah, we are a pretty, once we get to the alpha and beta deployment, it's typically within about a year that you'll see this starting to roll out. And we take a very measured approach when things roll out. We test it, we make sure it's great for our employees. Does it add value for our employees? Does it create a safer environment for our employees? And then we'll test that at a smaller scale. And then we go into the millions and millions of scale.
Hey, I want to go back to BlueJay and Illuna. Tim brought up BlueJay, your next generation robotic system, and Illuna is an agentic AI system. So talk to us about that. How much are they deployed today across your fulfillment network? And I'm curious about milestones that we should all be watching out for in the next 12 to 24 months, Ty.
Sure. So at Illuna, we're actually using kind of in a monitor only manner right now during peak. Right, we actually just went through the peak of peaks where we have our largest outbound happening just actually yesterday. And what Illuna does is it gives operators a complete real-time view to help guide their every move. Right. So think of many dashboards now can be consolidated into human consumable text, human consumable recommendations of how to actually deploy the network and how to deploy various robotics inside that building in a way that it gains these more efficiencies. So we're seeing that. That is rolling out today. And then we're really excited about BlueJay as well. You can think of this really for our same day network. That's a growing network that they have inside of Amazon where we're getting the goods right to the customer's door in a matter of hours. What BlueJay does is it really indexes on a smaller footprint. You can think of this as three assembly lines kind of combined into one, where we have robotic arms picking orders for our customers out of our containerized storage systems and allowing those to be delivered right to the customer's door. That's really an exciting time.
So if we think about this time right now, the holiday peak, where people are trying to get stuff as quick as possible, specifically, where does the tech that you just outlined have the biggest impact? Is it smoothing labor variability, preventing bottlenecks? Does it improve on-time delivery metrics? Is it all of the above? Is it something I didn't even mention?
Yeah, it is all the above. Plus, what it's allowing us to do is really exception handling, right? When we think about robotics and you think robotics and physical AI at scale, when you ship millions and millions every day, just 1% of exception handling can kind of eat your lunch. So any tools that we have to help us with the exception handling, maybe one of the systems is not picking up a particular object right. So that learning needs to be propagated through our other manipulation systems. Or maybe a mobility system is having some bottlenecks because of the way the inventory is stored inside of the building. People have really good skills of critical reasoning and critical thinking and using common sense. So tools that allow them to understand the situation better, perceive their environment better through the use of robotics, and then have truly physical agents to help with that in concert with our employees is going to allow us to deal with all the exceptions that we see, every day, especially at peak.
Hey, Ty, just got about a minute left here, and I know we've talked about this with you before, and I think it's a fair question. You guys have addressed it about the impact on your workforce, and I wonder if it's smarter to think about maybe not that what you guys are doing in terms of automation, or other companies for that matter, that it means doing away with workers, but maybe it means that you will have to hire fewer workers in the future. Is that fair?
Well, first of all, Carol, any question you ask is fair. So I think it is fair to always ask those questions, and we should always kind of, have the mindset of people first, and which we do inside of Amazon. So what are we doing specifically for our employees? And I'm really proud of this. We're building better machines for them. We're listening to them. We're iterating on our designs. We're rolling out a tool set for them to use it every day at scale, a scale that's almost unimaginable when it comes to what we've done inside of robotics. We're upskilling them. We have a $2.5 billion pledge that we call Future Ready to prepare 50 million people for how technology will impact and change not only the nature of work, but also what their everyday lives. And we're also creating a safer environment with our robotics, eliminating the repetitive, the menial, the mundane, allowing machines to do the heavy lifting and the repetitive actions, and allowing people to work with them in order to use this beautiful thing here.
So net,
he's pointing to his head, everybody.
I'm going to read that as that you'll be hiring more in the future. But we'll continue this, certainly in 2026. Happy holidays, Happy New Year. Love talking, certainly, with Ty. He's Ty Brady, Chief Technologist at Amazon Robotics. As we head to a break, President Trump speaking in the Roosevelt Room at the White House, talking about drug pricing. We'll continue to track.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Just getting word that the Epstein documents are expected around 3 p.m. That word from CBS. The Dow, the S&P, NASDAQ all pushing higher. Stocks are climbing on a record 7.1 trillion options day. S&P right now holding close to session highs. We're up 61 right now, 68.35. Gain there of 0.9%. We are, by the way, wrapping up the last full trading week of 2025. Dow Industrial is up 285, up 0.6%. NASDAQ doing a little bit better, up by 1.2% now. NASDAQ 100 index up by 1.3%. The Russell 2000 index of small cap shares also higher, up by about 0.8%. And the Bloomberg Mag 7 index up 0.7%. Dow Transports this Friday, they're down, lower little change, but the transport's down by about 0.1%. 10-year 4.14% with a 2-year 3.48%. Gold is up $14 the ounce, $43.47, now up by about 0.3%. West Texas Intermediate crude oil up 0.9%. WTI 56.66 a barrel. And Bitcoin up 2.6%, 87,770 on Bitcoin. Marin Pharmaceuticals has agreed to buy Amicus Therapeutics for about $4.8 billion, helping the biotech company expand its portfolio of treatments for rare diseases. Shares of both companies are advancing, with Marin up now by 20%, and shares of Amicus Therapeutics are surging by 30.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, almost every day an oil tanker arrives off the coast of Guyana to pick up a cargo that could reach a buyer practically anywhere on the planet. The stream of shipments is all the more remarkable because, Tim, just a few years ago, the country did not pump a single barrel of oil.
It was a really big deal.
Yeah.
They found it there. On the other side of the globe, at ports in the UAE, which has been exporting since the 1960s, there's also a constant flow of vessels pulling into load oil. OPEC's third largest producer sent the most crude overseas in years last month. Together, the two countries offer some of the clearest signs of an oil market facing a major glut. So writes our Bloomberg News team in today's Bloomberg Big Take. Here to talk about it is Bloomberg News managing editor for Energy and Commodities America, Simon Casey. He joins us here in the Bloomberg Businessweek studio. I just want to start with this basic question. When I was in college in the early 2000s, there was this theory that had emerged, which was like kind of peak oil. We are going to run out of oil, and the world needs to prepare for that.
That's right.
Was it just fracking that we learned, or different extraction methods? What turned that theory on its head?
Technology, fracking's part of that for sure, absolutely. Particularly here in the United States, totally turned around the fortunes of the United States oil industry, and you could argue the U.S. economy. But also, oil companies got good at extracting oil far, far below the sea. At deep out drilling miles beneath the surf, beneath the sea, beneath the ocean, in a way that was, unforeseeable. So we no longer talk about peak oil production. It's not a thing. We talk about peak demand, maybe, but that's some way off as well. We talked about that briefly during the pandemic. Both are growing right now.
All right. So what does that mean? That, prices are already down in terms of oil prices this year. Do they continue to go down?
That's the consensus. I mean, getting into the price prediction game is a bit tricky, and I never want to go there. But look, when you look at where we are at the moment right now, I think Brent is around $60 a barrel. It began the year around 80. As our story today says, people are talking about prices in the 50s next year, possibly even low. We could see that, and it could go down there.
Great for when we're filling up our cars at the gas station.
Still feels a little pricey when I fill
Does it?
A little bit.
You got to go to the not fancy gas stations. But compared to where we've been in the past few years, I mean, this is so much lower.
That's true.
So it puts more money in consumers' pockets. That's stimulative to the economy. But we were speaking with Michael McKee a little earlier, and he made the point that it also, but the challenge though is what it does for drillers and what it does for oil exploration in an economy where the president politically wants to drill, baby, drill.
Yeah, he was backed by the oil industry in his election campaign pretty heavily, pretty prominently. They want to have greater freedom to drill where they want, when they want, without regulation, too much regulation in their argument. And there's a wall of oil coming to the market, but it's not just coming from the United States, it's coming from OPEC as well. And that's a bit of a problem for companies here in the US. Now, they've got a lot more efficient, particularly here again in the United States, since the pandemic, since the nadir of the market. When you remember, we had negative prices at one stage, we had people going bankrupt. They've done a very good job of getting their costs right down, producing more from each well. So their break-even costs have gone down. But when you're talking about prices in the 50s, you're not far off break-even prices for a lot of producers here in the US. And there are some producers on the high-cost side who are going to struggle.
Okay, so what are break-even prices? Like, what is the cost of extraction?
It's a great question. It's always really difficult to answer. But if you're looking at the Permian Basin down in Texas and New Mexico, which is the biggest oil patch in the United States, probably around somewhere like $40 to $50 on average. For the Exxons and Chevrons of the world, they can live with prices below $50. Mm-hmm. Once you start to get to $40 and below, even they are going to have to make some tough decisions.
So, I mean, one of the things I think about a lot is what oil has done in making power brokers in the world, geopolitically or just economically. I was looking at, I think, Bloomberg says U.S., Saudi Arabia, and Russia are, I think, the top producers in terms of oil. Canada and Iraq are also significant producers. But I do wonder, with this oversupply, how does that change the dynamics of that power structure?
Well, the U.S. has made this big comeback. So with the fracking revolution, the U.S. went from a net importer.
That's a big deal, right?
It's a big deal.
Yeah.
I mean, it really is a foreign sort of policy tool that wasn't really there like a generation ago. And you can see that now with the Trump administration. It's not just oil, but remember gas as well. They talk about exporting LNG and how that changes the relationship with Europe. Europe is much more reliant on American energy than it used to be. So it's a positive for the United States. Look, Saudi Arabia is the power that it is because it's the next biggest oil producer. It produces oil far more cheaply than anyone else. Its costs are way, way lower than what
Meaning the cost of extraction.
Cost of extraction.
So
yes.
how low could?
That's a closely guarded secret, but smarter people than me estimate that it's in the single digits.
Wow.
Well, and the IMF says they effectively, Saudi Arabia needs a crude prices close to $90 a barrel.
That's the issue, yeah.
Right? And it's nearing its highest ever annual level of debt issuance this year. This is a change of fortunes.
They produce oil very profitably, and yet fiscally they're in a bit of a sticky situation. They're having to issue, I think, a record amount of debt this year to make things work for them.
But where does OPEC Plus come into this? Because OPEC Plus could tighten the spigot a little bit.
They could
reduce supply,
and maybe they will. Look, they've been steadily increasing,
and that would bring prices up.
It would, but then it's they're a group of, they have to find consensus. What's been going on this year, in large part, is a grab for market share, and this is one of the big games going on behind the scenes. Is US shale has been tremendously successful, especially post-pandemic. Yeah. They've steadily expanded, not in a reckless way, I think, compared to previous cycles. But as OPEC had pulled back, the US shale had got more of the world's share, a bigger share of global supply. And the Saudis wanted to take back some of that share. That's what they've been doing. They have all this idle capacity. They wanted to get it back. But I mean, yes, if prices continue sliding, if the global economy shows signs of weakness, maybe they'll have to take the opposite tack to what they've done this year.
What do you think is the net takeaway of this story and the oversupply? I mean, quite a change from where we were. I grew up in the 70s, and I remember, the license plates, odd evens, and who could go to the gas station. So I'm just wondering the net takeaway of what this all means.
There is plenty of supply, and look, the outlook for prices next year are pretty bearish, and it's going to take something truly extraordinary to change that. And you can never rule out price shocks, because what did we see in 2022? We saw a major war, Russia-Ukraine, and that changed things completely overnight, and prices went above $100 a barrel. So, God forbid something like that happens again. But that is that's the main takeaway from the story. There's plenty of supply next year, and it's unlikely to change in the short to medium term.
Simon Casey, managing editor for Energy and Commodities America for Bloomberg News, in our studio with us. Check out the big take. The world is awash with oil, and prices are poised to keep falling.
It's a great deep dive there. Hey, folks, we're coming back looking at stocks on the move. In the meantime, as we head to a break, once again, we take you to the nation's capital, the White House, the Roosevelt Room. We are now various members talking about drug pricing.
You're listening to Bloomberg Businessweek Daily with Carol Masser and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, we are coming up on the last hour of trading as we get ready to wrap up the trading week. We're a little excited because you know why?
Why? Why are you excited?
We're off next week.
I didn't know.
Can we say that?
You know what?
I just did.
Working makes me excited, Carol.
I love working.
I don't want to be off.
Oh, come on.
Is this thing on?
Okay, I love working too, but I also like taking a break every once in a while. I like being with my family too.
Hey, just a little preview of what we have coming up in the next hour. Some fun stuff.
It's all business.
Yeah, fun stuff.
All right, we do have some fun stuff. Wow.
Yeah, we're going to be joined by the CEO of Lofted Spirits. We're going to talk the high-end alcohol business.
No, you know what's really cool?
And it's like perfect before so many people are going and spending time with, their families and stuff for the holidays.
Hopefully drink some whiskey.
Not that like drinking is what you want to do when you're with your family, but you know what I mean.
We're going to drink whiskey with David Weston.
I know.
That's what's cool.
That's pretty cool.
That's my Christmas gift. Like, that's kind of fun. David always teases us that we have these guests on, alcohol guests, and he's like, wait. So now we're inviting him to the party.
Okay, before that, a little business.
Yes.
All the S&P 500 up 0.9%. The NASDAQ Composite up 1.2%. In the S&P 500, in terms of what's moving, only utilities and consumer staples are in the red today. Information technology surging along with healthcare.
And we should point out we are continuing to monitor an event at the White House.
Speaking of healthcare.
Yes. And it's supposed to be, they're talking about pharmaceutical pricing. And so all of this, Johnson & Johnson is expected to be at the White House next week. So anyway, we're monitoring those headlines as well. That is a live shot. Various members of the president's team and others there as they are making a drug pricing announcement. We're looking for a little bit more details on that. The president did say that the 3 pharmaceutical companies that still need to offer pricing concessions with the United States to avoid tariffs have also agreed to a deal and are coming in at a different time next week. So again, monitoring that for you. A day where we are seeing a rally in stocks in a big way.
I'm Tim Stadivec along with Carol Masser. Let's take a look at some stocks on the move today. With us is Bloomberg News cross-asset reporter Emily Graffeo. She joins us here in the studio. Everything in the green? Is that what you have today?
I don't have everything in the green, but we can start with a stock that is up, Tim. Oracle, ticker ORCL. It's up about 7%. It's still down 15% on the month, but we did recently get news that TikTok is said it's being bought by a group of buyers led by the software company Oracle. And the TikTok CEO told employees that ByteDance, their parent company, signed binding agreements to create a joint venture majority owned by American investors, including Oracle. This is according to an internal memo reviewed by Bloomberg. The kind of question mark here is whether Chinese regulators will approve the transaction in order for the deal to proceed. But when you look at what analysts are saying, this will drive revenue for Oracle's cloud infrastructure business.
Are they getting the algorithm?
So the new arrangement will license the algorithms used from ByteDance and have additional oversight with Oracle overseeing the process. It remains, though, unclear how effectively it constrains subtler forms of influence, though. Dave Lee of Bloomberg Opinion, who's covered tech for years, out with a column. Just in the last 45 minutes, it's a must-read on the terminal.
But good news for Oracle.
Yeah, there's another Oracle headline. The TikTok news probably moving the stock up more, but we also got coming today, Michigan regulators unanimously approved a request from utility DTE Energy to power a massive data center development planned by Oracle and OpenAI. That could be driving that stock as well.
I agree with you. I think that's important because the stock was up out of the gate, right? Yeah. In a big way. I mean, it's up a lot more, but I agree with you that I think that certainly provides some momentum in terms of the AI play. All right.
Okay, that's momentum to the upside. Little momentum to the downside, unfortunately, for Nike today.
That's right. Yeah, this is the 4th straight day that the sportswear retailer is dropping. It's lost over $10 billion in market cap just today. Biggest drop since April. Ticker NKE. We all know this company well. It's down about 11% right now. The third quarter guidance disappointed investors. They had earnings on Thursday. They said that sales will decline this quarter amid weakness in China and then also weakness in the Converse brand. So people not wanting to buy up Converse. Sneakers are very
personal.
Yeah.
I don't know. Yeah. I mean, people
wear and then they want something else.
People have multiple pairs of sneakers. So, I mean, do you have a lot of sneakers?
No.
Do you have a lot of sneakers?
Not a sneaker guy.
Not really.
I will say my daughter has a multiple. And in high school, that's all they wore with like different kinds of sneakers, like constantly.
Right, yeah.
Well, Lisa Mateo making that point earlier today.
Did she? Yeah.
On Surveillance. And she said it used to be the kids all had Converse, and now she said they all have Hokas. Seriously.
Hokas are cool.
Yeah.
What can I tell you?
Hokas, Adidas. You don't see a lot of Converse out on the street. But I feel like they're a classic. I don't know. Maybe they'll come back.
We only have a minute left. I want you to get to BioMarin Pharmaceutical.
Yes, this stock is up in a big way. It's up 17%. Biggest jump since November 16. BioMarin Pharmaceutical, BMRN. They agreed to buy Amicus Therapeutics, which is a biotech company that will help the company expand its treatments for rare diseases. So they specialize in rare disease. And that stock, Amicus, is also up in a pretty big way. Some double-digit gain there. But yeah, deal news in the pharma industry.
All right, good stuff as always. Bloomberg News cross-asset reporter Emily Graffeo. Thank you so much as always. Check out our Stock Movers podcast, 5-minute episodes of the biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts.
Hey, just taking a look at stocks right now. S&P 500 up 0.9%. The NASDAQ Composite up 1.2%. We're hitting the markets hard next hour on Bloomberg Businessweek Daily.